Here we are looking at the markets. Some of the indices are pushing higher, while the older indices like the Dow Jones and the ASX are struggling. Gary Glover takes a deeper dive into the indices to see which sectors and which components are showing where the opportunities are and areas that are looking overstretched and exhausted. Good morning, Gary. How are you?
Yeah, I'm great. Yeah. And that's a bit of an odd open there because that's exactly how it looked on the weekend to me. Is it looked like the NASDAQ was looking really extended and did show a little bit of weakness there, sort of finished down the bottom of the range. S&P looking a bit extended as well, hitting a bit of a first level around that 150 extension there. I think it will get to the 161 at one stage, but there is a bit of a level here, which could cause congestion there. Whereas the Dow and the XJO, they look kind of firm to me. So I thought, well, the Dow's sort of still, we have seen them diverge from each other a bit lately. So it's weird, actually. I wasn't surprised to see the Dow up strongly last night, the NASDAQ down strongly, and the S&P maybe just up a little bit. So, and our market up today as well here. So really, that's funny. That's the way it looked. And I was trying to think what might drive that too, Chris, as well. So it's really sort of obviously tech has run pretty hot here. Thought financials obviously have run pretty hot in Australia as well. So I thought maybe those sectors might sort of cool a little bit there. But when I look through the resource sector, BHP, Rio, Fortescue, they've been cooked. Energy's come back, big pullback. Lithium's been, massive pullback, big cooked as well. We're seeing gold have a bit of a retreat here. We're seeing uranium stocks have a retreat. If I look through the whole materials sector, almost every sector's had a retreat there. And the XJO is sitting here, 77.30, while the whole resource sector has had a pretty big pullback there. So that's a really good sign there because the index has held up pretty well. I know there's some pretty stretched areas there of the market there, but while they maybe congest or sort of cool off a little bit, if resources bounce here, then we can basically push this market to a new high there. And it's unusual that you think about like the Nikkei. So if remember the Nikkei went to a new high, broke out, obviously one of the first markets to break out to a new high. I think it sort of powered off about 3 or 4 weeks, came back, or maybe something like 12 weeks or something, maybe even a bit longer, came back, retested the breakout zone, and then took off and then had a big move there. So we did break out there a while back, had a bit of a push, come back, retested, bounced again, tightened up here. So, normally when you run up impulsively and then you go through a consolidation, the odds favour you breaking out in the manner that you came in. So, yeah, exactly. So, look, they can break down, but I'd say, 8, 9 times out of 10, you're going to break out in favour of how you traded into those sort of consolidations there. So, odds favour, a bit of a breakout there. We've seen here, like, every time the market sold off like 200 or 300 points, we've seen this big gush of buying come in and drive the market straight back up again. So, good volume last week. We saw good volume 2 or 3 weeks ago off that low. The previous little low, there was volume gushed in as well. Just haven't seen the follow through at the top there yet, Chris. Every time we get up higher, volume sort of starts to sort of lose momentum there. But eventually the whole thing will tighten up and then you'll push through and then pop there. But for some reason, our market looks pretty buoyant. And yeah, mate, I think if resources do bounce here, then, that's probably, I'd say at least 40% of the index is resource, maybe even heavier now. It definitely does sort of move as performance sort of changes there, but it's a big, heavy component of the XJO is materials orientated. So, so I think it looks pretty good.
Well, it's a heavy component of this week's report that you've got a lot of resource companies in there for good reason if that's where you see the opportunity.
Yeah, no, I definitely do.
Well, looking beyond those, you've talked about the NASDAQ, you've talked about the SP500. You said in your report that there was a bit of a connection or a disconnect in the sense that the Dow Jones was being left behind with the ASX. Is there anything you're looking for differently in the Dow Jones than the ASX? Because obviously it doesn't have that materials exposure. So
yeah,
Just that it's got less tech, or how do you
I
think?
thought it might have expanded that back to a marginal new low and then gone higher after that. But with the other indices, they're sort of, having pushed on, and then the Dow come off, and then now the Dow's sort of showing strength while the other ones are weakening off there, sort of, kind of like it's almost, because obviously growth has run pretty hard. Obviously, NVIDIA, a lot of the tech stuff has gone pretty hot there. So probably seeing a little bit of profit taking in some of those tech growth stocks there, maybe getting a bit more defensive. That's obviously why healthcare's had a nice sort of bounce there. Just seeing, I think, even some infrastructure in the States as well. So it's just some of the more, slightly more defensive sort of sectors have done well even in the last few days in the States there. So definitely just seeing a little bit of a shift there. And that's, thinking about sort of high inflationary periods of the past, you do definitely get that sort of more volatility in markets there. And we're seeing some pretty big moves up and down here, pretty choppy, pretty volatile there. Bit of a trader's sort of market there. But I notice a lot of stocks that have been getting disappointed, or something external comes out sort of which might impact the company. It gets it's getting hit pretty hard, maybe for like 1 to 3 days, but then a couple of weeks later it just tends to bounce straight back up to the highs there. So definitely seeing a lot of that activity there. So but yeah, the Dow's I'm a bit more neutral on the Dow there. It's just so far the whole thing is sort of tightening up here, so it's more of a sort of sideways sort of kind of consolidation sort of grind there, which does sort of fit that election year type of price action as well. So so I'm probably a bit more neutral on the Dow here. But I say it's interesting that the Dow and the XJ are sort of looking for sort of firmer here.
Well, if we're looking to the XJO on the energy side of things, you'd mentioned earlier that part of the market. Woodside, we can't look any further than that when we start off looking at energy in the Australian market.
Yeah.
You've talked previously about the consolidation and taking on of those BHP assets, and a bit of a teething situation that can take months to 18, 24 months to really work its way through. Could this congestion of volatility that we're seeing here be a bit of a sign that the stability is returning in Woodside's share price?
I think it actually might have broken today, Chris, actually. Might have broken out here. So, look, it's a big level, $27 there. That's sort of the 50% sort of Fibonacci level there. So definitely, if you look at a lot of the major stocks here recently, we've seen like something like Sonic there sort of came down into the 38, bounced to the, bounced up, went back to the 50, bounced to the 38, and cracked the 50, went down to the 61.8, bounced back here. So definitely seem to be respecting some of these lib levels for a lot of the majors there. So it is a big level at 0.7. Definitely seen really, really tight price action. Very similar to the 21 correction here. And we've sort of got this ending diagonal, which is that's exactly how the 21 moves and finish with the ending diagonal as well. So yeah, just the whole thing tightened up here. We've definitely seen volume increase here in recent weeks. So sort of first signs of accumulation there. I just like to see a bit of a, because you do have lower high there. So you're always a risk of maybe being wrong or breaking down. But I think once you break one swing high, that's a pretty good sign. And if you break two swing highs, that's a very good sign there. And we've had lots of little lower highs in that sort of setup there. So the great thing is here is pretty good risk reward here, Chris, as well. So, I mean, out of that 21 move there, I think it moved something like 30% there within a month or two. So it was a pretty strong move here. So, I'll be probably happy with half of that move, even, twice as slow. So, but the whole thing sort of tight up. It looks pretty good here. We know that, obviously energy is, one of the more, stronger sort of sectors in high inflationary periods. So even though inflation is moving down here, it is still elevated, and there is some risk that, inflation could, spark back here. And we've seen in the past central banks have sort of maybe cut rates a little early and inflation's come straight back here. So this is definitely in the right sort of window to me. It's a bit like the precious metals gold stuff as well. We know gold did pretty well in those periods, and then obviously we know value shares did pretty well. So I still think you're going to be looking in those areas there, and then just, maybe look at growth when it's, when things are sort of starting to improve there. But now the growth has run too hot to me. It's run pretty far here. So definitely seeing that sort of, slowing down here. So I think this looks pretty good here. I've already got like an 8% position built up here, so I've got one of the largest ones here. It's actually broken above a minor swing line here today, so that's good enough for me to add to my another 3% here. So this is going to be the biggest holding I'll hold here. It looks pretty good. I think the Santos chart, the next chart, Chris, looks even better. Because if you think all those, obviously Woodside's had a big correction, like Caroon Beach, they've all had pretty large pullbacks there, but Santos has just traded in a tight sideways sort of band here the whole time, and even the last 10, 11 weeks. Look how tight that price action is. And the one thing we've learned over the last 3 years, Chris, is that when the market pulls back or the sector pulls back, the stocks that hold up the best, that basically show that relative strength versus the market, they're the ones that go on and have the biggest moves. So to me, this one looks like it's just, it's like that. I think I can't remember if it was Minervini or Ryan. It was like one of those sort of traders. It might have even been O'Neill there. It was talking about the strongest names there. When they, after the market sort of comes out of a low or the sector comes out of a low, within 2 weeks they've gone back to the old highs. The strongest names will go back within 2 weeks. They'll be retesting the highs within 2 weeks of the turn there. So this is what's looking really, really strong here. Struggling, it looks like it's struggling to go down. That's the thing. It's actually struggling to go lower there, and then it's got some volume coming in. So I think if it sort of breaks a couple of little swing highs here on the daily there, it's broken one little one. I think another sort of slightly higher break here. I think this looks pretty good. Yeah, this is one I've already positioned on Monday, but this is one that really actually does catch my eye quite the most here, Chris. This is, all the stuff we've learned the last few years there, everything's telling me this is the one to be that could have the strongest performance there. So let's see if all the learnings eventuate here, but does look pretty robust to me. So I'll be looking to add to my position there, most definitely.
Nice. Well, that's 2 energy companies you've been adding to. The third one in the list for this week's report is AGL, with the ticker AGL. You're talking about congestions before and relative performance. Well, This one's actually climbed when Woodside's fallen and Santos has held sort of steady but volatile and narrowing volatility. This one's climbed and then had narrowing volatility. So how do you look at that?
So again, that's just relative strength there. It's basically, it's had a pause, and so when we have a pause there, we normally get like I think McLaren used to say we get a correction in time or we get a correction in price. And when you see a correction in time there where basically it doesn't come back much in price, that's a stronger correction there. So at a really tight pause there, and then again, so that's showing relative strength versus the sector versus the market versus everything else there. So that's a really, really small correction of that entire range there. So I know McLaren used to sort of say if you stayed in the top quarter of the range, so basically if you just say you rallied $1, then you only pull back say 25 cents of that dollar, you're staying in the top quartile there. That's a sign of real strength there. I think this is even stronger than that. That's probably at the top, maybe 12 or 15% of the range here. So really, really, really strong here. So looks pretty robust. Looks like it's breaking out there Friday, some good volume as well. So so look, it's obviously that sort of sector there. We've seen Origin have a pretty good move there. Not one of my favorite companies, AGL, because it's been pretty poorly managed for quite a while, but has sort of turned a corner here recently. The previous update was probably one of the better ones for quite a while for AGL. So, the needle might be changing there, might be turning there. So, so I think a few brokers have sort of upgraded a little bit there, but most of the price targets actually aren't that much higher from what I saw there. So maybe a little bit higher there, but price action is suggesting something a bit more bullish there. So I think it looks pretty constructive.
Well, if we move from the energy sector into a different change of gears into Credit Corp, this is a downtrend. It's clearly highlighted in sort of these parallel lines you've got here, this channel that's just been stuck within, bouncing a bit like a pinball in between it, but seems to have sort of possibly a false break or a double bottom somewhere around that. And then a congestion, like you've said, a bit of a correction in time, correction in price, but after 3 days up, took twice as long to come down, didn't come down as far, and then it's turned the corner on the daily chart.
Yeah, so it's had a pretty pullback there. Yeah, it actually looks very similar to Collins Food, CKF, which has actually just had an update this morning, and the share has popped. Um, but yeah, I think not sure the update was fantastic. I thought it was sort of some good, some bad in there. But the mentioning of sort of the what do you call it? They got the cargo business there, and that's all going pretty well. And then maybe look at maybe floating that out or something, So after the good amount, geez, companies know how to talk the language, how to get the share price up. They're really good. So well done to Collins Food there, because the share price is sort of definitely up there. But this is sort of similar chart there. Been in that sort of had a pretty decent pullback here. So I don't like to just buy the break there, Chris. I like to sort of see the break there, maybe have another pullback and sort of congest, and then maybe you break in the first consolidation there. You just probably got to sort of see the right sort of volume characteristics as well, because you can just get a little ABC and then regain the downtrend sometimes. So you want to sort of see a little bit of volume come in. Next pullback, you want to see it dry up a little bit, and then you want to sort of see a break of that, a little B wave break as well. So being a little bit patient there, starting to sort of see a few turns there, and maybe you get like a little 1, 2, 0, 1, 2, 3 build in here as well sometimes. So they don't just reverse and go straight up there normally. So definitely one to sort of be keeping an eye on there. So had a tough time sort of Credit Corp as well. So all the free money out there, sort of the credit market hasn't really been that robust there, but I think things are sort of starting to turn a little bit there for the Credit Corp. So definitely sort of one to keep an eye on there.
We are seeing a lot of reports coming from retailers downgrading earnings 20% and the like. So that may flow through to Credit Corp on the positive side of things. Maybe rerunning of GFC 2007, 8, 9. Time will tell. Moving back into the resources side of things, you've got Regis Resources. So on the gold stocks, you mentioned gold stocks at the top. What do you interpret with this chart in Regis?
Yeah, it's funny. I think I said this before. We went through, obviously the spot gold has been fairly robust there. It's held pretty tight. It's had a bit of a pullback, but not come back that much. Whereas you go through all the gold names, and I did go through the list the last couple of weeks there, and they're all over the shop there. Some of them have had, held up pretty tight. Some of them had pretty big pullbacks. So some of them performed pretty well. Some have expanded. Some have tightened up. It's a real sort of hit and miss there. So I think you're going to sort of look at the sort of stocks there individually. Probably going to want to see your sort of setups as well, Chris, as well. So I do like sort of seeing the expansion and new high and then expansion to new low as well. So I look a bit of a false break on both sides there. So has sort of completed that. But it's the volume that's probably striking me a little bit as well. I definitely want to see signs of accumulation taking place at those new lows, which we definitely have seen here in the last few weeks. And yeah, it's just definitely one that we look at there. Because if gold is going to sort of resume the uptrend, then we can still have a pretty big move. You just don't want to be risking. If you're wrong in this market, that's the thing of the trader. Then you just want to be losing small. So losing is inevitable if you want to be a professional trader there. But the key there is just to lose small and to win big here. So I do like these sort of these false breaks there, and because then you sort of if you buy sort of close there, then your tights your risk is pretty small, and then your reward can be pretty high as well. So that's the type of sort of trade that I don't want to be taking here. So I mean that's the beauty of that Woodside trade, Chris, as well. That was sort of look at that sort of $27 tight entry there, looking for a little after the false break there. I mean, I think I end up with like a 10-to-1 risk reward on my first entry, and maybe like an 8-for-1 risk reward on my second entry. So, that's a trade that I'll take every day. I'm prepared to be wrong with those as well, because then if I'm right, then we get a move up there. You're risking pretty small and you're winning pretty big. So, that's my kind of trading really. So, yeah.
Well, if we go from one gold chart into another, we move, just bring the charts back down here. We've seen Regis Resources, as you're talking about, breaking to the upside.
Similar looking chart, isn't it?
Yeah.
And it's just come back slightly below. The volume's up again, so nice expansion there. I mean, we sort of got that one low already in 22. Probably got a high low there, in October 22, and now we've sort of come back pretty deep there, sort of October 23 as well. And maybe this is another expansion there. So, potentially, bit of a bigger basing pattern here as well for the sort of stock here. So, I do like to sort of see the sort of 2 or 3 sort of higher lows over the longer frame there. So, that's interesting sort of setup here. So that's probably, those sort of stocks there did sort of catch my eye there just because risk reward, time frame there, a bit of a building process there. And so definitely sectors that in the past have been pretty buoyant while inflation's been high there. So I'm still of the camp there that there's still a chance inflation could come back here. You don't do the largest single printing money event in the history of the markets and get through it so easily, So I was sort of a little, I'll be happy if we are through it. That'll be good for equity markets, but if you get a little bit of inflation sort of coming back a little bit, that's often occurred as well here. So we just got to follow what history tells us there.
Well, Michelle Bullock did leave the door open for rate rise. It's interesting that the conversation was not about a drop or steady. It's actually steady or a rise. And that does fit into what the narrative you've been talking about for years, which is inflation can be quite sticky. But getting sidetracked, we stick with the gold miners before we come to the last chart. So the second last chart, we're into grey mining. You did say that gold charts were all over the place, quite a mixed bag as to what the charts look like.
Yeah.
Well, I love it when you see a possible false break, because that quite often can be the opportunities where you're talking about massive risk to reward ratios. So very small risk, large upside.
Yeah.
Do you want to see a bit more to happen to De Grey before you start putting your money to it, or what do you want to see unfold?
Yeah, I just like to sort of see that sort of come back here. So I think if it actually stabilizes this week and holds that low, Chris, I think it'll be a pretty good sign there. So I haven't pulled the trigger here, but yeah, definitely a sector there. Just it's funny when you go back and look at those sort of biggest movers, momentum stocks there, and you go back and do your recaps and stuff there. So you read your model books and stuff there, you will see those larger 3-wave pullbacks like this, and then oftentimes a false break or just the C wave will go sort of slightly lower, and then that's often the turning point for the market there. It's often when you sort of you actually get some of the big pops come out of that sort of setup there. So it's funny, I was looking at a host of Kalamagi charts there this morning actually, and I reckon probably 60% of them had that type of setup there where they were the leading names, had the 3-wave pullback and then kapow. So doesn't always happen there. Obviously, it's not. Look, I was going to say De Grey is not a leading name there, but but in some regards it has been, because we know that gold and uranium have been 2 of the leading sectors here in the last sort of year or 2. So there's been some decent moves there. So yeah, just interesting setup there. Just seeing big volume down at this low as well. So pretty interesting there. So. Yeah, it's just interesting. We're seeing lots of setups there. Even PLS has come back, retested the low here in the last few days as well. One of the big lithium though. So it's trying to hold today there. So it potentially could give us a false break here today as well. So just BHP got 46 down to 42 or something there. So it's been stuck in that range all for the last few years there. So it's down the bottom of the range as well. So it's very strange that the whole sector, because in the past they would normally seen maybe energy does well and gold not so well. We normally see one sector doing pretty well and maybe another one not doing so well, but at the moment they're all seeming to be on their knees a bit at the moment, which is sort of strange. But some potential opportunities there. If it does turn here, it'd be great for our market. So pretty interesting.
Okay, well, one that's not in the mining space, PXA Group. What's happening here? You've got the daily chart. We have looked at the weekly a few times before, but there's a few different lines happening, and I'm going to guess this was bullish spacing that was happening, but now it's coming back to retest the old high that we saw.
Yeah, it's had the game-changing news, obviously, going to the UK there, doing a deal with the UK Bank West, and then, so it's had a pretty hot run on the back of that. Then had a bit of a tight consolidation there, broke out of that little rectangle, notice how it's moved, but almost by the height of that rectangle, it's moved down here. It's a bit of a measured move, you might say. But yeah, it's come back to the old high there. So in a normal market, when you if you do break out, you'll often come back and sit on top of the old high and then build from there. So this is this is a zone where you probably should be looking to build here. So we can hold here 1360 in the next couple of days there and hold that nice and tight and start to turn back up again. Definitely one to be following there. So I think, again, that PXA is, look, it's got about 85-90% of the Aussie market. There might even be more than that. So it's not going to grow too much more in Australia here, but it's all based on the growing overseas. And that UK market is just ripe for disruption in that property settlements area. And banks typically in the past, if one adopts a new methodology, they all tend to follow. One moves into buy now, pay later. They all move into the one moves into managed funds, and they all move into that. So it's just So I think there'll be definitely a really interesting space here to follow, to watch here. But I think PXA looks pretty interesting here. Just needs to hold this 1360 here the next couple of days there. But I have bought some here, just around that mark here, and probably keep it a little bit of a toss. Probably give myself a little bit of room. But this should be a key level here.
Well, that's a good insight for PXA to understand how a game-changing trade can work in somewhat of a sideways market that we have had, not quite a full freight train runaway momentum, but there are some that have been shooting the lights out. Does it fit into technology in the same overlay in the US? Definitely not the same AI space, but it's far from the miners that you've talked about. So it's showing the two different speeds within the Australian economy.
I did see David Ryan would have put a tweet out this morning there, kicked off there, basically saying obviously some of the growth and tech names are running pretty hot there, but he was also saying the market is, it's buying the breakouts is not working at the moment. So he was saying, basically, waiting for the pullbacks. So basically, identify your names, wait for those pullbacks to whether it's come back to the 50 or back to the 21, however your style is there, but actually buying the pullbacks is working more effectively at the moment. So as traders there, you got to adapt a little bit as well. If you're, if it's not working, because I like to have a few different setups that I look at. So I know many he's only got his one setup there, but I like to trade a couple of setups there, and then if one's working, then I just try and persist with that, and if it stops working, maybe do a little bit more heavier on the other setup there. It's just because the market will change as well. So yeah,
that is a good insight to end on, with being nimble and adaptive to the markets while sticking within your lane and your specialty of your setups, knowing when to push and pull and lean into more of them or lean back if the opportunity's not really showing it. And here that David Ryan's also sharing those insights is useful. To that end, we say thank you very much for sharing this week's report, Gary Glover from Novus Capital.
Thanks, Chris.